Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, January 29th, 2021. I'll talk in this video. I want to cover do kind of a hybrid. I mean, things usually are. It's technical analysis. I want to cover the broad markets, several of the sectors that stand out, but also trade ideas. I'm just rather, lately I've been putting out official trade ideas, but I'm, official, unofficial. If I like a trade, I'm going to tell you I like it. I'm going to tell you where the targets are, and it's more about getting the ideas out to you and be able to do frequent updates versus trying to spend the time managing all the active trades. So, forgive me that those active trades are stale, the official trade ideas. But again, I do these videos, so I'm going to get this out to you guys. And I'm doing it today because I think we're as close as I've seen in a long time for finally to get the first decent sell signal on the market for a swing trade. I'm not, what I'm doing here is we're looking at the daily charts. I'm not even going to go into the 60-minute charts. 60-minute charts, we've had several trendline breaks, and they resulted in little corrections that got bought up, relatively small corrections. But this is the big thing right here now. That's the trend line off the March low, so it's a significant trend line, SPY, and I've just put an update today, so I'm not going to spend a lot of time. There's that breakdown on Wednesday right here. Impulsive, everything you want to see in a breakdown, check marks across the board, but where the one check mark was missing, as I always say, you need to see both SPY and QQQ break down. The tech-heavy QQQ, it's been the market-leading index. It outperforms the S&P 500 at almost all points in time throughout the last bull market and the previous bull market before that. You have your higher growth companies in there, and not just higher growth companies. They are the largest component of the S&P 500 as well, and I'm referring to the tech sector. So those are that's the sector that we need to see break, and the tech-heavy Nasdaq 100. So QQ or SPY again, by all accounts, had a sell signal, back tested the next day, moving lower today. First target remains there, about 364.24, unadjusted target, and you can see additional targets, potential targets. Let me make sure. Yeah, we'll see where it goes. We may get a correction down to, that would be, I think at minimum, well, okay, let me just make it very clear. Minimum would be the first target. That's 364.24. But I think more likely we'd get a drop down there at about 352.19. That'd be about a 6% drop from where we are. And, we'll see if and when that even happens. If we get the sell signals there, the weekly charts and other charts show us that we could have quite a bit more. But first things first, we need the sell signals. And what we need to see, as I said this morning, is the Qs to break down. So this is QQQ, daily chart, same trend line off the March lows. There we are, starting to crack right now. As I often say, you want to see an impulsive candle. This was an impulsive candle, but it wasn't a breakdown candle. So the farther we get away from here, below here, intraday, we need to take out today's lows. I think I did say that earlier. Here's the Qs. I've got the after hours trades on there. Let me just go back to where we were at. Today's low is 315.98 QQQ. So we need to see that go, and a solid close below there. Right now we're just too close to the trend line. See, if I zoom in, the trend line moves. Now we're above it, close to it. So in other words, you shouldn't have to say, is that a breakout, not a breakdown, not a breakdown. You'll know it when you see it. You'll see, start to see a swift drop in the indexes, a lot of selling. So until then, we could have another stick save. Stick saves have been a dime a dozen lately. A stick save is when a security breaks support intraday, only to close the day back up on or above that support level. So that's it. So we need a little more downside in the Qs, and that should give us a sell signal. Today's Friday. Here's the thing. Unless you have a big solid close below the trend line today, they're going to keep everyone guessing. Markets will close down. Then you have the 2 extra days of overnight risk where the market's shut, and it'll pick back up on Monday. And then the tough part is if you have a marginal sell signal. Let's just say we close right now where we were. I'd say it's a sell signal. It's not ideal because it's not high volume, impulsive, but we could then gap down on Monday, and that's the tough part. So if you're looking to position for the next correction, you'll have to make a decision today. Is to position ahead of what's going to happen over the weekend. What I mean by that, if let's say we gap down 3% on Monday, and you're going to buy SQQQ, well, that's going to be it's going to open up 9% on Monday with a 3% gap down in the Qs. I'm just using an example there. And then what happens is a lot of people don't want to chase a 3% drop. And if you look at it this way, you might not want to chase a 3% drop from where we're at now. I'm going to measure it out, would take us down to about right here, right where the crosshairs are. You can see the measuring tool in the pop-up box to the left. And so what that would do is put you smack in what I call no man's land, which is no man's land is when a stock is between a support and resistance. And I don't like going shorting or going long in no man's land. Why? Because gap down 3%, they could buy up the gap, back test. So that would be your next objective entry if you didn't short ahead of time, coming into next week. And again, I'm just making that assumption, 3% gap down. Then you'd either want to wait for a kickback to back test the trend line or close to it. Or, and again, you can add there, but then you're just, it's much harder to manage stops. And again, buying in a position like that, there's always a chance you're going to get the dip buyer stepping in a counter trend rally. So, trade it as you want. Sometimes you just have to anticipate. And I think the breakdown is imminent. That's why I'm doing the video here. This is as close as we've been for a long, long time. All right, let's get away from the major indexes. And again, they're nice because, especially for those that don't have a lot of time or don't want to put a lot of effort into diversifying and shorting or going long or short individual stocks, you can buy one ETF. In this case, QQQ or any of the variants like SQQQ, which is a 3-time short inverse of the NASDAQ 100, or TQQQ. That's 3-time long, and of course they have QID and QLD, the 2-time long and short, or just PSQ. If you don't like leverage and you want to short the Qs, you can buy PSQ. So there's many ways to do it, and as you guys know, futures too. If I get into the futures charts now, this video will go forever. Let's move on. All right, other things to look at. Well, let's just start out with some of my recently highlighted trade ideas. The energy sector. That was first mentioned as an objective short here. There's several ETFs I've covered: XLE, XOP, XES, and they're all going to move roughly together. Usually get more bang for your buck on SEX and XOP. And this again was the DRIP, as what I've been highlighting as the 3-time inverse of this sector, the oil and gas exploration and production sector. And so DRIP has the same components, tracks the same sector, it's just leveraged up 3 times, and it's also inverse. All right, so what we did is, on the daily chart, we came down, broke trend, almost hit that 63.51 support, and we're still below trend. So there's still a sell signal here. I just want to reiterate, I still like this one. Here's XOP. We hit my first target here. Again, we had several sell signals, and we need to break that level. 63.71 will open the door for a drop down to 57.17. That would be a drop of about 13% or so. Or you can keep it simple, go with DRIP. Ideally, we would have seen DRIP go up. I don't like the sideways chop. And remember, this is a 60-minute chart I just jumped to. I was on a 60-minute chart on XOP a second ago, right before this one. But I do expect if we get the markets to break down, then DRIP will play out the way that I prefer it to if you're holding it for a swing trade, which is a relatively unidirectional move. This is relatively unidirectional, pretty swift downtrend. This is sideways. That's when DRIP, this is when the decay happens, when you're moving sideways. We've moved sideways for a little bit, but we're still, profitable from where it was first mentioned as a long entry here. And the story on DRIP, just like XOP, has that support I just showed you we need to break. DRIP needs to pretty much bust out, clearly take out the 20, 21-ish level, and that'll open the door to my first target there. Unadjusted, that's the actual resistance level, 2288, and I've continued to maintain this as my current preferred swing target, meaning I think we'll get a decent reaction there, and if we hit that next week, odds are good for a pullback, so an active trader could either book full profits or at least raise stops if holding out for this potential third target. Can't rule that third target out. Because if we get the sell signals on the stock market, like I think that are coming, it looks like we could get it, maybe not today, maybe into next week. We'll see. I have to continue to reiterate. Support is support until unless broken. So we go to QQQ. Where am I at now? Somehow I flipped over to an hourly chart. Hold on one second. Oh, there we are. Um, again, I think it's going to be a very swift drop, rush for the X. It's based on many factors that are under, going on right now under the hood in the market. So, one that I think that target could be hit, that first target, in a matter of a day or two, possibly. That's a 5% drop from where we're at right now. Wouldn't surprise me to see it hit within just, like I said, a couple days or so. And if that happens, where I was going back to drip and XOP and all that, we can blast right on through some of those initial support levels on the oil and energy sector. Let me give you some other ideas. Here's one if you want some, juice it up. The VIX, I've covered the VIX lately. This was one of the biggest moves, especially without the market being in correction mode. In the VIX in quite some time. Remember the other day I highlighted it here. I said we had to break above this level right here, this line at about 28.32, and we did. We broke out. That was a breakout. It happened right after I covered the VIX on the last update. Boom, moved up, back test. We're above it. So the VIX broke out. The VIX is moving higher, and again, I've went over this in the past. So I can't do it now, but the VIX tends to have quite often predictive values. Starts to move ahead of a correction. And again, it was set up, and it has been for quite a while, just like the stock market, with the negative divergences building on the stock market. We've had the positive divergences building on the VIX, and the VIX has already turned the corner, and it's in an uptrend. And so, one way to trade it, there's many out there, is VXX. Forget about the red lines here. I'll show you the lines. This is from a previous trade set up on VXX. This is the short term. It tracks short-term VIX futures. You can't buy the VIX. I just showed you VIX, which is the VIX Volatility Index. That is an index just like the S&P 500. You can't buy the S&P 500. What you can buy are an ETF that'll track it, a mutual fund. Many ETFs track it. You can buy futures, but the actual index itself. So the only way to trade the VIX is indirectly through proxies, and those proxies are VIX futures. And they come in just like all other, like stock futures, for example. You can get near month, go out several months. And so with the VIX, if you're using these ETNs, you can do the short term or the medium term. I don't know if there's long term futures. Usually shorter, medium term. And here's one that trades well. A couple of these blew up back in over the last couple of years, as a matter of fact. But this is what I just showed you here is a bullish falling wedge pattern in VXX, and it looks ready to pop. You can see all these reactions on that trend line. Positive divergence. I should have had it. I don't know where that line went. There's your positive divergence lines right there. We're right at the downtrend line. Pop above there. I'll show you my targets real quick. Again, those are from other trades. 2140 is mild resistance. Actually, these same levels, I had this as a stop before on a previous trade. It was T1 was hit right here. So yeah, go in reverse. These levels are still valid. $24, $26.89. I'd maybe call that $27. And then I had this target back here, 31. It was support back here. It was hit here as resistance, a little brief momentum field overshoot. So that would also be a target. Those are potential targets for the VIX right there. And because we've had, and I've been harping on it for quite a while, those extremes in the put to call ratios, extreme and bullish sentiment and all the indicators, that tells me that there's going to be a very swift, that's why I expect a swift drop, because the market is not protected right now. And I'm talking the vast majority of market participants. Speculators, been a lot of speculation, a lot of call buying because everybody's bullish. And so what happens is when the market starts to correct, all of a sudden you see a surge in put buying, and that's what will spike the VIX. And it'll also cause a quick drop in the market as institutions scramble to protect their losses. They sell longs, they buy put protection to hedge up. Again, so that all goes in together. So there's one trade idea. And don't underestimate the gain potential on this one here. Cuts both ways. If you have high gain potential, the VIX can fall very fast too, but it's one that I like. All right, I already showed you energy. I've been talking on that for a while. What else do I want to show you? A couple weeks back, just maybe a week or two ago, I highlighted what I believe to be some of the most bearish sectors at the time, and one of those was XLF, was right here. Big resistance. I'm going to roll back. This is a daily chart. We had major reaction highs up here around this 31 level. We hit it there, and since that update, the financials have fallen. They've already corrected about 8%, so they're in correction mode right now. There's some minor support right around here. I'll give you an additional line, but they broke this trend line and negative divergence. If they continue to fall, which I think they would in a correction, I think they could come all the way back down here to 25.89, and I'm saying XLF, that's the financial sector ETF. That'd be a drop of about 11%. The other one I mentioned, a couple more. IYT, I think we were above trend when I highlighted that recently, but you can see we broke trend, and we've already hit my first target right there. About a 5.5% drop to about 214. There's the first target. If and when that breaks, which I suspect it will, we're going down to about the $200 level. I mentioned biotechs, XBI, ready to go. Bearish rising wedge, trend line right there. Negative divergence, and I'll give you one more target here. First target would be that reaction low about 139.60 and then 122.43. If you want to juice it up, LABD is a two-time. Well, oh no, they got rid of that one, didn't they? A lot of these leverage ETFs. Oh no, it's still there. I was going to say a lot of these leverage ones either blew up, went away, or they went from 3 to 2-time leverage. I guess this one's still 3-time leverage. Look at that big bullish falling wedge pattern. Wow, a lot of hot air there in the biotechs. You got to be careful with price targets because there's decay in this one. This is a very volatile ETF. So, you want to go off that XBI. XBI tracks the same biotech index. There's many biotech ETFs out there, but XBI is the one that uses the S&P biotech index. And so if that's what you want to chart, use this chart if you're going to trade LABD or LABU, which is a 3-time bullish one. And then, like I said, the other IBB is one biotech ETF, non-leverage, PBE. So those are some of the other ones. They're just going to have a different basket of biotech stocks with different weightings. But the story is the same on these guys. Negative divergence. This one already broke down its back testing. There's an objective entry on PBE, short entry. I'll give you that same first target, that previous reaction low, and this my preferred swing targets. To me, I see the biotechs first dropping about 8%, get a reaction there, break that level, and we're coming down here about a 16-17% drop. And that's PBE. All right, next up, I'm going to loop back to something related on the stock market. I covered it in this morning's post. I won't spend a lot of time, but there's Apple. I laid out recently the potential for a false breakout, aka bull trap. That's what we had. The breakout was above the 138, 139-ish level, those previous reaction lows, and we're back in. Now, I said it wouldn't be the end of the world to come back in. Technically, it's a failed breakout. It is right now, and that's a check mark for the bears. However, we're still in a primary uptrend. The Qs are still above trend, and what I said in the last video is here's an uptrend line that would be okay to see us come back in a little bit for the bullish scenario, as long as the bulls step in here and buy. This is where the bulls should be buying. Buyers, I'm saying, should be stepping in and buying here if this market still has more upside to go. If the supply-demand dynamics are still shifted to the demand side, meaning more people are willing and ready to buy stocks, more cash on the sidelines, this is where they should, quote unquote, should step in. And if they don't, then at 125.75. So another way to say it, if we break below this trend line, that should open the door for a move down to 125.75. That's good support as well. That would be, again, that's going to be bearish, but if they can step in here, then there's still a chance. We break 125.75, I think we're coming all the way back down to that 106-ish, 106.50-ish level. And so that would be a potential drop in Apple of about 18%, 19%. That would obviously take the market down with it if Apple would drop that much. So I wanted to point that out. One of my favorites, if you want to short big tech, Tesla needs to crack 802, or not crack it, take it out with conviction. It's minor support. Said we wouldn't go with 60-minute charts, but that's where I had it. I showed you before this 802 level. Look at it, we're almost another test of it there. Very close. Remember, we're at 807.43. When I say 802 on an 800-point stock, a couple points is statistically insignificant. You're talking a fraction of a percent. So call it 802, call it 800, but again, a solid break, and it's pretty thin. Yeah, that'd probably be my first. There's some support here. I can tell you right there. That's where the buyers would step in right there first, around 681.39. So that would be, there's your first target if you want to use a 60-minute chart to hone in, and that would be a drop of about what is that? If I can get the line on there, about 15%. So these are kind of giving you numbers here. If you're talking 15, 16%, and I think that's in line with what the Qs could drop here, at least. All right, a couple others just to go through these quick because I covered them recently. Semis look ripe for correction as well. A lot of hot air to come out of the semis. If my charts will load, there's a trend line on SOXX just starting to crack. Same story. We just need to take out that previous reaction low from Wednesday. Should do the trick. SMH is another ETF right there that tracks the semi. Primed and ready to go. If we get these sell signals, I'll follow up with some price targets. I can give you one right there, minimum target about 211.47. If you want to, if you don't short, but you want to buy an ETF that shorts for you, SOXS. 3-time, chart's a mess, I haven't updated. Oh, what happened? They must have done a reverse split and all my lines moved all over the place. But that's your 3-time, and that tracks the same index as SOXX, except it's inverse and 300% leveraged. Yeah, and one more I wanted to mention. A few weeks back, I mentioned palladium is set for a big drop, and I told you it would be on a break of this uptrend line right here. This is PALL, the ETF for palladium, and it broke down recently and started relatively small, but it's gaining some traction to the downside today, down another 5% or so. These are old levels from previous trades, but I think ultimately we're coming back down here to this 193-ish support right there, and that'd be a pretty decent drop, even from where we're at right now on palladium. That would be a drop of about 7%. And here's my palladium futures chart, PA. We're at support right now, so you don't short at support. You want to see this 2206, 07-ish level go. You can see all these previous reaction lows there. But bigger picture, it's been in a sideways trading range for a while, but you get these minor uptrend lines. I believe this was also covered in the last video. So this was the last uptrend line here. It broke and we've been moving lower, and I think that's probably where, if I covered this, I believe I did in the last update on palladium, I think I covered the future, said that would be your next target. So we've effectively hit that target after the most recent sell signal, but if that's taken out, which I think it will be when the market breaks, you got a lot more downside to come, especially after breaking down from a trading range like this. That's like a coiled spring, and that could lead to a big drop in palladium right there. And we'll wrap it up here since we're on futures. The other one I really like, when the market breaks, I think lumber will come down with it. This is LB lumber futures, big divergent high. This is the 120-minute chart, so 2-hour candles right here. PPOs rolling over, crossing down. You have divergence here on the RSI, and lumber, I think, is poised for a drop, and it'll most likely coincide with a drop in the stock market. It's correlated. If the stock market corrects and puts the brakes on the housing market, and that would then also put drop demand for lumber, or even expect demand. Won't immediately drop the housing market. That takes a while to gauge where the housing market's at. You don't have day-to-day, minute-by-minute pricing, but again, it's the implied thing that when the stock market drops, consumer confidence drops, people's savings drop, and therefore the housing market and the stock market tend to go hand in hand. And then of course lumber for demand for building. All right, let's wrap it up here. Those are plenty of trade ideas. Keep it simple. If you want, short the indexes when you get that break. When we get it, like I said, I think you could even roll the dice if you're aggressive and take a start or short position today. If we even look like we're breaking down or poised to close below the trend line on the Nasdaq 100, which as I said, I would wrap the video up, but that looks like it's happening now. So I'm gonna get the video out to you guys, and like I said, aggressive. We're down below there enough right now. A stick save certainly possible, but again, we're so close. These divergences have been building, and this might be it. We'll see at the end of the day. I'll do a wrap up if we get a big move, whether it's a big move up or down. Otherwise, we'll pick this up on Monday, unless I see any other trade ideas that I want to get out to you later today. This has been Randy Finney with Right Side of the Chart. Have a great day.